Markets are poised for a pivotal week, with the VIX at 19.6, as all eyes turn to the CPI inflation report, which could fuel Fed hawkishness, impacting tech, healthcare, and finance sectors, setting the stage for a potentially volatile ride. Stay with me, your complete market intelligence briefing starts right now. The market tone this week is cautious, with the S&P 500 down 2.85% week over week, and the NASDAQ down 5.09%, indicating a risk-off sentiment. The VIX, a measure of volatility, is up 24.22%, signaling increased uncertainty and investor anxiety. The yield on the 10-year Treasury note is up 1.36%, which could be a sign of rising inflation expectations. The US dollar index is up 0.57%, which may put pressure on commodities and emerging markets. The key theme this week is inflation, with the CPI Inflation Report scheduled for June 10, which will be closely watched by investors and the Federal Reserve. A hot print could lead to a more hawkish stance by the Fed, which could impact interest rates and the overall market. The top-performing sectors, including energy, healthcare, and financials, are likely to remain in focus, while lagging sectors such as technology and consumer may experience further downward pressure. The overall market regime is characterized by normal conditions, with the VIX at 19.6. This week, it is essential to keep a close eye on asset classes that are sensitive to inflation and interest rates. The economic releases this week, particularly the CPI inflation report, could significantly shift market sentiment. Now let us go sector by sector and break down exactly where the opportunities and risks lie. Technology sector performance was notably weak this week, with the sector ETF declining by 4.5%, although it remains up 1.34% for the month. The Relative Strength Index, or RSI, is currently at 53, indicating a bearish trend in signal. This downward movement was largely driven by concerns over the upcoming CPI inflation report and FOMC rate decision, which may impact key names such as AAPL, MSFT, NVDA, and Meta. Notably, the semiconductor and software segments were particularly affected. With an RSI of 53, the sector may be due for a potential rebound, although investors should remain cautious given the current bearish trend. Please keep in mind this is educational content and not financial advice. It is essential for investors to consider their own risk tolerance and strategic positioning in the technology sector. Healthcare sector saw a notable gain of 2.37% this week and 5.23% this month, driven by a strong performance from key pharmaceutical and biotech names. Johnson & Johnson, United Health Group, Pfizer, AbbVie, and Merck are among the notable stocks in this sector that are worth watching, as they continue to drive growth and innovation. The key risk or catalyst this week will be the overall general market conditions, which may impact the sector's performance. With an RSI reading of 64, the trend remains bullish, indicating a potential for further upside. From a technical perspective, the sector is showing signs of strength, and investors may consider strategic positioning to capitalize on this momentum. Please keep in mind this is educational content and not financial advice. Financial sector has shown a notable performance this week, with the sector ETF up 1.4%, driven by solid earnings reports from key banks such as JP Morgan and BAC. The overall trend remains bullish, with the Relative Strength Index, or RSI, at 53, indicating a neutral to slightly bullish stance. Names like GS and WFC are also worth watching, given their significant exposure to the asset management and fintech spaces. This week, the key risk or catalyst will be the CPI inflation report and the FOMC rate decision, which could influence interest rates and subsequently impact the sector. From a technical perspective, the RSI reading suggests there is still room for upside, and strategically, investors may want to consider positioning themselves for potential further gains in this sector, keeping in mind this is educational content and not financial advice. Energy sector performance has been notable this week, with the sector ETF, XLE, rising by 2.45%, driven largely by the continued strength in oil prices and improving sentiment towards the sector. Key names such as XOM, CVX, and copper are worth watching as they have been leading the charge in this trend. A key risk or catalyst this week is the general market conditions, which could potentially impact the sector's performance. From a technical standpoint, the RSI reading of 52 suggests that the sector is not overbought, indicating a bullish trend. This is educational content and not financial advice, but strategically positioning for a continued bullish run in the energy sector may be prudent, given the current market conditions and the sector's recent performance. Overall, the energy sector's prospects appear favorable, driven by the ongoing demand for oil and gas, as well as growing interest in renewables and energy infrastructure. Consumer sector performance has been under pressure, with the sector ETF declining by approximately 4.97% this week and 4.18% this month, indicating a bearish trend. The key drivers of this weakness can be attributed to concerns over consumer spending, particularly in the retail and auto space, with names such as Amazon and Tesla worth watching. The upcoming CPI inflation report is a key risk or catalyst this week, as it may influence consumer behavior and spending patterns. From a technical perspective, the RSI reading of 38 suggests that the sector may be oversold, which could potentially lead to a bounce. Strategically, investors should be cautious and consider a defensive positioning approach, given the current bearish signal. Please note this is educational content and not financial advice. Industrials' performance this week has been modestly positive, with the sector ETF gaining 0.61%, although it remains down 1.52% for the month. The Relative Strength Index, or RSI, is at 45, indicating a bullish trend in signal. Companies like CAT, HON, UPS, BA, and GE have been key drivers of this sector's performance, with aerospace and defense names showing particular strength. This week, investors will be watching for any signs of improvement in general market conditions, which could serve as a catalyst for further gains. From a technical perspective, the RSI reading suggests there is still room for upside, and with the trend and signal both bullish, a continuation of this momentum is possible. As always, this is educational content and not financial advice, and investors should consider their own strategic positioning in the context of their overall portfolio and risk tolerance. Material sector performance has been lackluster, with the sector ETF declining by 1.02% this week and 3.4% this month, indicating a bearish trend. The decline in key stocks such as LAN, SHW, and FCX has contributed to this downturn, largely driven by general market conditions. This week, market participants will be watching names like NEM and APD, which have been impacted by fluctuations in commodity prices. The Relative Strength Index, or RSI, is currently at 41, suggesting the sector is in oversold territory, which could lead to a potential bounce. However, with the overall trend remaining bearish, investors should exercise caution. As we navigate this environment, it is essential to maintain a strategic positioning that balances risk and potential opportunities. Please remember this is educational content and not financial advice. Utilities performance has been subdued this week, with the sector ETF down 0.16% and a month-to-date decline of 2.98%, driven primarily by a lack of catalysts and a neutral market environment. Certain key names such as NASDAQ and so are worth watching, given their significant weight in the sector. The FOMC rate decision is a key risk or catalyst this week, as rate changes can significantly impact the utilities sector. From a technical perspective, the RSI reading of 42 suggests a neutral trend, indicating that the sector is not currently overbought or oversold. Given this, a strategic positioning towards a neutral or slightly defensive stance may be prudent as the sector navigates normal market conditions. Please keep in mind that this is educational content and not financial advice. Real estate sector performance was notable this week, with the sector ETF gaining 1.14%, driven by positive sentiment towards commercial real estate and home builders. Key names such as PLD, AMT, and EQIX are worth watching, given their strong fundamentals and recent trends. The CPI Inflation Report and FOMC rate decision are key risk catalysts this week, as they may impact interest rates and borrowing costs, affecting the sector's overall performance. With an RSI of 49, the trend is bullish, indicating a potential for continued upside. From a technical perspective, the sector's RSI reading suggests it is not overbought, allowing for further gains. Strategically, investors may consider positioning themselves for a potential upswing in the sector, although this is educational content and not financial advice, and investors should carefully evaluate their own risk tolerance and investment goals. Crypto sector performance was severely impacted this week, with the IBIT ETF declining by nearly 18% and a staggering 26% for the month, clearly indicating a bearish trend. This downturn was largely driven by general market conditions, which had a ripple effect on key stocks such as Bitcoin, Ethereum, and Solana. Notably, the Relative Strength Index, or RSI, is reading at 16, signaling an oversold condition, which could potentially lead to a near-term bounce. This week, the key risk or catalyst to watch will be the overall market sentiment, as it continues to influence the crypto space. From a strategic positioning standpoint, investors may want to consider a cautious approach, given the current market regime and normal conditions. Please remember this is educational content and not financial advice. Commodities sector performance was lackluster this week, declining by 0.66%, with a monthly loss of 3.81%, indicating a bearish trend. The Relative Strength Index, or RSI, is at 43, which suggests that this sector is not yet oversold, but rather, it is still in a bearish mode. Key names such as GLD, SLV, USO, Corn, and WET are worth watching, as they are significant components of this sector, which encompasses gold, silver, oil, agriculture, and soft commodities. The upcoming CPI Inflation Report is a key risk or catalyst this week, as it may influence investor sentiment and commodity prices. From a technical perspective, the RSI reading suggests that there may be further downside potential. Therefore, a cautious approach is warranted, and investors should consider a defensive strategic positioning. Please remember this is educational content and not financial advice. Forex sector performance has been quite notable this week, with the UUP ETF rising by 1.3% and 2.45% for the month, indicating a bullish trend. The sector has been driven by the strength of the US dollar, particularly against the euro and yen, with key names such as DXY, euro to US dollar, and US dollar to Japanese yen worth watching. The upcoming FOMC rate decision is a key risk or catalyst this week, with market participants closely watching for any changes in monetary policy. With an RSI reading of 75, the sector is technically overbought, suggesting some potential for a pullback. From a strategic positioning perspective, investors may want to consider taking a cautious approach, as the sector's recent rally may be due for a pause. Please keep in mind this is educational content and not financial advice. This week is pivotal for market participants, with the Consumer Price Index inflation report due on June 10, a key gauge of inflation that has significant implications for monetary policy and market valuations. The CPI report measures the change in prices of a basket of goods and services, providing insight into the overall inflation trend. Market consensus expects a moderate print, but a hot inflation reading could lead to increased hawkishness from the Federal Reserve, likely resulting in a sell-off in equities and a rally in the dollar, as investors price in higher interest rates. On the other hand, a cooler-than-expected print could spark a rally in equities, particularly in growth-oriented sectors, as it would suggest the Fed may be less inclined to raise rates, thereby reducing the downward pressure on valuations. The following week, the Federal Open Market Committee will announce its rate decision, which will be heavily influenced by the CPI report. Markets are closely watching for signs of a pivot, either hawkish or dovish, as this will have a significant impact on market dynamics. A rate hike would compress valuations, particularly in the technology sector, while a rate cut would likely ignite a growth rally, benefiting sectors such as consumer discretionary and industrials. The dollar would also be impacted, with a hawkish pivot likely to strengthen the currency, while a dovish pivot would weaken it. Historically, the period surrounding the FOMC rate decision has been marked by elevated volatility, with the S&P 500 experiencing an average move of 2% in the 5 trading days leading up to the announcement. It is essential for investors to remain vigilant and adapt their strategies accordingly, as these events will have far-reaching implications for the market. And please remember, this is educational content and not financial advice. Thank you for watching. Please like and subscribe to Financial Market Oracle, share your key sector or stock in the comments. Remember this is educational content. I wish you a profitable and disciplined week. I will see you next week. Stay profitable. This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.